Hello everyone, Edward here. In this video today, I'll be going over a company that has been backed by the US government and has been shrouded in secrecy in the private markets for 17 years, and that is Palantir. The company has 3x since they IPO'd, and now some are arguing to take some profits and some are actually saying to hold it for the long term. Don't worry, because I'm here to show you guys my quick analysis of this stock, so please stick to the end of the video to see whether this stock is worth purchasing. In today's agenda, I'll go through an overview of Palantir and what they do. Second, I'll go through their financials and valuation. And lastly, I'll let you guys know my thoughts and what I'll be doing with Palantir stock. Before we begin, I ask you to please smash that like button down below for the YouTube algorithm. Thank you. So now we get into the first part of the video, which is an overview of Palantir and what they do. Palantir is a data mining company that offers software to analyze data in a secure centralized system. The company was founded back in 9/11 in order to protect the US government. They are known to work with the CIA and also the FBI. The goal and purpose of Palantir is to make sure that the United States will be the strongest country in the world, but also making sure that the world is in peace. The company was founded by Pltr, who is a legendary entrepreneur that co-founded PayPal, and at the moment the CEO is Alex Karp, a guy with the coolest hairstyle ever. Their software actually helps governments and companies find suspicious activity within a large dataset. This type of software was mainly used back in PayPal to detect fraud and hackers on their platform, but now they brought the same principles that they learned back in PayPal to Palantir. Governments at the moment are using their customized data analytics software to hunt down terrorists. It was said that Palantir actually helped the US government hunt down Osama bin Laden. However, they didn't really justify and claim that they did. They have very strong long-term contracts with the military, and this just shows how secure and reliable their software is. However, Palantir did shift away from just working with the governments and signed big contracts with corporations. Fiat Chrysler uses their software to detect faulty car parts, Airbus uses their software to determine any manufacturing issues, and BP uses their software to determine oil drilling data. All these companies I mentioned uses a software called Palantir Foundry, which is one of the technology that the software provides. What the software can do is actually collect data within an organization to help companies better understand the problems within their company so they can actually solve it. Furthermore, the next key technology that they offer is called Palantir Gotham, which takes existing data so they can look for patterns. They provided a really great example, and it goes like this. If a food company ships thousands of meat packages, but the meat packages have E. coli in them, then how would the company try to stop it and recall the packages? What Palantir software can do is track the data on the delivery routes of the packages, which stores got the infected meat, the potential customers that actually bought it, and they will track this by using their credit card data. And from there on, they will also look for information from hospitals. By having all these data points, this can stop the E. coli from spreading. This is the power of 17 years of machine learning and AI. The target of their software are bigger companies with about $500 million of revenue year over year. And an average company pays about $5 million to Palantir each year for their services. Currently, they have about 11.5% profit margins on their services. They currently only have about 125 customers at the moment, and the top 20 customer makes about 67% of their revenue. These aren't the best numbers if we compare them to other B2B services such as Salesforce. However, if they're able to close more bigger contracts with companies, then this could be a good long-term play. We can't always just talk about the products and services because there's always someone leading the charge. Alex Karp is currently the CEO of the company, and this man will speak freely on what comes right at him. He's very vocal with his political views, which differs from the founder Pltr. However, he doesn't let these things stop and blur the vision of the company, which is to simply help the United States become the strongest country in the world. It's as simple as that. He's laser focused on the mission, and he doesn't care about what the media thinks about his company. He's an eccentric philosopher that understands why he's doing what he's doing. He knows that he's in a very dangerous business, and for those that don't know, he gets a lot of death threats due to the controversial image of the company. He's been running this company for about 17 years, and all in all, I think he's a fantastic CEO. So to sum it up, Palantir is a very complex data mining software that's able to run on any organization or enterprises so that they can improve their process process and solve problems within their company. Now we'll get into the disadvantages of Palantir. I definitely don't want to go political here, but Palantir doesn't have a good image and is very controversial on the media. The biggest one is that the company is supporting ICE to make sure that illegal immigrants doesn't come into the US. This is where kids get separated from their families, and this is definitely not a good look for the company. Another risk would be a data breach within maybe the security of defense. Imagine if that ever happens. It would literally drag the stock down the sewers. However, I'm confident that they're smart enough not to let that happen, but I can't let this go as a disadvantage because this isn't a 0% chance. Now we'll get into the financials and valuation of Palantir. If we quickly go through the balance sheet, we can see that the company has about $1 billion in cash and a long-term debt of $300 billion. This is a great sign because they can actually just pay off their debt whenever they want. We can see that they have a current ratio of 2.54, which is great. That means they have more current assets than liabilities within the next 12 months. They grew revenues of about 20% from 2018 to 2019, and they are making decent top line this year, which is great signs of growth. However, the company's net loss is worrisome because they lost about $1.1 billion this year. And as for a company that has been doing business for 17 years and making no profit, that is a little scary. Now if we go into the cash flow, they actually made a really huge cash flow during Q2, but the recent quarter they had a negative free cash flow. This isn't a deal breaker because they are a growth company right now. If I was an investor in this company, I would pay very close attention to the net loss every quarter. Since they aren't profitable, there isn't a PE ratio to look into, so I'm gonna use the price to sales ratio as an alternative. Right now they have a PS ratio of about 45, which is definitely really high. The average is about 1 to 2, but since this is a growth company, I would be comfortable if this was higher, but it really depends on the industry, but 45 is high in my books. Disclaimer, I am not a financial advisor. Please do your due diligence and research before buying any stocks. This video is for educational purposes only. Everything I say is my opinion and I could be wrong. Now we'll get into the last part of the video, which is my thoughts. To be completely honest here, this company has a very super complex software. They're competing in the data analytics and the AI space. But in the future, I can definitely see a lot of corporations adopting this software. I'm not a big fan of B2B businesses because I do prefer B2C instead. However, I can definitely see the hype and attraction to the stock. It is backed by the US government, so the chances of them going bankrupt is very slim. The software is very useful, especially for really large enterprises. What concerns me is that this is an unlucrative company that has been operating for about 17 years. If they continue to close out deals with other big companies, then I would say that this could be a good long-term spec play. But right now we don't have the roadmap for profitability. The CEO himself couldn't really answer the question on when he sees profitability, but he did say that the software will speak for itself in the long term.
So walk us through what the path to profitability looks like.
Well, you know, we build these products years before people build them, and that takes money. And what you saw when we did that is we grew the company 49%. And we're just going to be very, very focused on invigorating our software offering. I think that's a pretty strong indication of what the future could hold.
2022 proposition or 2023 proposition?
You can push me, but of course my lawyers will shoot me. What I can tell you is we are very, very focused on building software a long time before other people building it, supplying it.
One danger that I'm seeing in this stock is that it rallied really fast. I'm seeing a lot of short-term investors hopping onto the stock and not deeply understanding how the company operates, which is why I made a very quick analysis here for you guys. There's definitely a lot of things that I didn't cover, so if you own this stock, please dig deeper into the company. Now we'll get into the bonus clip, which is tip of the day. And the tip of the day is valuation will matter in the long term. I've been seeing a lot of people trying to hop on stocks that will 2x or 3x in a couple of months. I hate saying negative and bearish things because I want people to have a really strong mindset when they invest in the stock market. But sometimes we have to step back and reflect what is happening right now. All these rallies are not common in the stock market, and this is not how it usually works. Investing is all about patience. Warren Buffett once answered a question, why don't everyone just copy and follow what you're doing? And he answered, because people don't want to get rich the slow way. Please let that sink in. In my opinion, I think that the market is very sketchy right now, and I think that Mr. Market will come and do something about it. That wraps up for this video. I hope you guys learned something new today. Please like, comment, and subscribe, and hit that notification bell. If I said something wrong in this video, please let me know in the comment section down below. I'm definitely not a perfect human being. Just remember to be nice about it. Thank you for watching, and I'll see you guys next time.